guys? Welcome in to another live stream here. Hope you're having a good day so far, or a good week. I'm gonna try and keep it short today. I'm not really feeling that good, if you can sense it from my voice, but we have a little bit of an update here. Of course, if you have been following the stream for a while, you know that we have been talking about a bounce for a long time. That bounce came just 2 days ago on Monday with the gap up after everybody was super bearish after the yearly breakdown. This was the break of last year's high, and then bears got trapped nicely there, which is what we already were anticipating because I spoke about how bearish everyone was on last Friday's stream. So if you had positioned yourself, you would have made a really nice amount of money. Personally, I am up about 30 grand across those trades. On the main account, 35 grand total from the calls that I played from last week. So I had some 3,800 calls, made one bad boo-boo trade on 3,500 calls, 3,500 puts, trying to scalp to the downside, but then it backfired in my face, but that's okay. Risk management to the rescue. Yeah, the rest of the trades played really fat, about 126% on this one, 117% on this one. First bout was about 76% on the SPX calls, so pretty decent payback on the calls that we took. On the small account, we're up about $200 for this week. I closed these out for a slight profit, I believe, yesterday, so I'll be updating that very shortly. In terms of technicals, and macro hasn't really changed right now, but obviously you guys saw the news. I think there's a lot of calls for the Fed to calm down with its, disinflationary tactics. Everybody's kind of feeling the pain of increasing interest rates, but such is the game, because when you have that much liquidity sloshing around and they don't take that money back for a long time, people have grown too accustomed to having cheap liquidity and cheap funding. It's painful to rip the band-aid off, and that's the delicate process of what the Fed has to meander through in order to get everybody onto the same speed. So this is it's terribly painful for the Fed to do what they're doing, but it has to be done. In the great words of Bernanke and Volcker, who had similar they had similar decisions in their time. We are also in unprecedented times. Don't forget that right now the war in Ukraine is getting worse. Freaking North Korea is shooting missiles over Japan. There's talks about nuclear bombs being used, and things could escalate very quickly. But the market is pricing in a recession next year already at this point. What kind of a basis point rate hike we're looking at in the next session is likely going to be a 50 basis point rate hike. We're also likely to see CPI numbers come in still sticky, which means that they will probably be higher than expected, or probably as expected. I don't think that inflation numbers are going to come down that drastically. Not to mention, one of the biggest contributing factors is going to be OPEC, and that's with relation to the price of energy or oil. OPEC reducing the output of production for oil. I think the likely scenario is 2 million barrels per day, which is quite a fair bit. That means that we're talking about oil prices rising again. That brings the inflation narrative back again, makes it higher. You get what I mean? There's a lot of sticky things going on. I don't expect this market to come back into all-time highs anytime soon. Okay, it's not, at least for I would say 6 months, 1 year, maybe even longer. Okay, this is different from many other times when we have been in a similar situation. So from the macro perspective, if you ask me, it's obviously frugal, or it's anti-productive to keep buying the dip. However, I have added a position, one of my first few buys of the dip here. No, actually, hold on. I take that back. I think my first buy of the dip was probably somewhere here, maybe. This is my second buy of the dip, and I have one more. I have quite a lot of cash to deploy, so I'm still waiting to deploy more of that cash. Now, the obvious level here. So let's talk about what's about to happen next, right? We spoke about what has happened. let's talk about what is about to happen next. So in terms of what has happened, we already know that, this over here was a blast of a lot of bears that were waiting to be trapped. I already mentioned about this on Friday's live stream, so if you haven't watched that live stream, please go watch it. And then come back to this live stream and then continue watching from here, because then it makes more sense for you since you listen to what I'm saying there and then you come back here. Now that we actually have bought up very quickly and significantly in 2 days, this is a very quick buy up, by the way. You can see that every single quick buy up so far has been faded, and I think that over here is where we probably trap bears one more time. So there is a very significant likelihood that what we do is we come down here a little bit and then we bounce on either 37.32, 36.84, either one of these levels here, 37.32 to 36.84 in one of these levels, and then we head to the upside at 3900. After which we come to 3900. That should be, you can see this is a very significant volume node apart from the 4200 volume node, which is up here. So we're looking at, if we do break above 3925 or so, then we're looking for the next volume node, which is at 4200 roughly. I don't know how likely of a scenario that is, but what I do know is that there's a very high chance that we bounce on 37.32 all the way up to 36.84. So we come back down here, bounce, go to the upside. 3900 is probably where we get a rejection, and that should set off the next wave to the downside. Okay, so that is typically what I'm looking at. The plan is, I don't intend to short this year. It's pointless because the risk-reward ratio sucks to short this year. But what I do intend to do is to buy some long calls, hopefully on the dip right here, to the upside into the 3900s. Play that upside, and then once I get that upside, and obviously I'm talking about all of this with confirmation. So make sure that you're looking at all of everything. What does that mean? You're looking at the breadth of the entire market. You're looking at things like Apple. You're looking at Microsoft, the big movers. Are they due for a bounce, etc., right? And how are they moving in cadence to the market? Look at bonds, look at dollar index, look at everything before you place those trades. And then once we get that little bounce to 3900 is where I intend to short. So that's the plan for at least the next I would say 1 week or 2 weeks. That should be the long-term plan. Now in terms of I think there's going to be a lot of economic news that's going to be coming out. So we'll see what comes out as we get along. But that's kind of what I'm looking at for now in terms of planning for S&P 500. Nasdaq has a similar looking chart, but then the bounce level is likely to be around 11.3. If you look at it in QQQ, it's probably easier. With QQQ, you're looking at a bounce at around 275 or so. Somewhere all the way until 275. That's where I'm looking at, and then the upside from there. So yeah, that's definitely a lot of things going on. The upside is going to be 288, just so you know, on QQQ. Okay, just to give you in terms of what we're looking at. Now next up, there are a couple of tickers that look interesting. Marvel Semiconductor breaking out of a downward falling wedge pattern. I like this kind of a pattern. This is a bullish pattern. If we can get a bounce confirmation at 45, I will go long with Marvel. So it needs to come down to 45 and bounce. Once I get that 45 bounce, I'll take the upside. Probably play for some 48 calls or even 47 calls, depending on what I can get my hands on with good open interest and volume. Obviously, look at the implied volatility of the option chain as well. Tesla, one of the bigger names on the wall that everyone's talking about. Coming out of this sideways channel, broken down. I spoke about Tesla on Monday's stream, and I told you guys that there's some big volatility event about to happen because we saw the implied volatility on the option chain go kind of berserk. Now, from this wave here, if you look at the extension, the 61.8 extension is at 236, so it kind of still has a little bit of downside. But as I said, today we're looking for a rejection of 248. If we can get a rejection of 248, I'll gladly take some 240 or 230. Yeah, 240 puts would be nice on Tesla today, if I can play it to the downside. So that's kind of the game plan with Tesla here. Play some 240 puts if I can get a rejection off 248. That means a gap fill to the upside. And that would be a nice play to pretty much get this downside action going. Twitter, not really looking so much at it. XOM, I'm already in this play. Played it about 1-2 days ago. We took some long calls on this. Sorry, not XOM, XOP. This is the oil and gas ETF. So I'll be looking at this continually as well. Okay, that's all I have for today. Do you guys have any questions, have any comments, want me to break down any tickers? Go ahead, put it in the comments. I have about 3 minutes till the market opens, and I'm trading with the team on Discord. I hope that you guys are having a good morning. Once again, thank you so much for attending this live stream. If you are here for the first time, make sure you click that subscribe button and leave a like if you can, so that this video helps to reach a broader audience. YouTube algorithm. Appreciate it. I'll wait about 1-2 minutes, see if you guys have questions. If not, I'm going to end the stream and get to it. Airbnb. Okay. This one does look interesting. Let's see. Weekly on next week expiry on Tesla 240p. Kind of depends on how much balls you have. Today's Wednesday. My guidance rule of thumb is on Wednesday before lunch, do the weekly. After lunch, take the next week expiry. However, do also note that the implied volatility of the options chain is already elevated with the VIX at 30. Remember that all options are more expensive than usual now. So you're already overpaying. You might as well take the weekly. If you're going to gamble, you might as well gamble like with weeklies rather than gamble with the next week's. You're going to end up risking more on the table. The volatility is going to be high anyway. So my advice is go for the weekly instead of going for the next week. But you have to be super careful with your risk management. And you have to be super tight with it. Okay, going back to Airbnb. This one looks like it's still in a sideways trend. It came off from a downtrend, and then it's moving into a sideways channel here, so I'm not sure if you can see it. It looks like a decent play for a possible upside, but you need to be careful here. I would say break above 114 with some decent, volume or momentum would send this to the upside. Personally, I don't want to touch this right now because it's in between. So you have a risk-reward ratio. This is the risk you're taking on, which is going to be roughly about $10. And your reward is, what is that? Like $18? You're getting a little less than 1:2. So you're risking 10 to make 18 versus risking 10 to make 20. I mean, it's not a terrible trade. It's just you got to be really careful because, the way this is set up, it just came off of a falling pattern here. And it's failing to find demand. Not only that, volume has been pretty low trading. You got to have some really strong conviction trading this for, otherwise, there's absolutely no point. So above 114 with confirmation makes sense. But if you're taking above 114, then I don't recommend this as a swing trade because the risk-to-reward ratio is wonky. So above 114 is only going to be a day trade, and then you play it up to 120 or see how far it can push up to 123, 124 at the maximum there. That's my 2 cents on that. All right, the market just opened right now. So it's SPY gapping down here. All right. Any other questions? I will be on Discord if you need me. Also, feel free to send messages on Instagram. I will answer your questions regardless of whether you're in our Discord or not. I always answer questions. So don't be shy. And sorry that I am sick. I can't seem to catch a break for some reason. Like I went to Phuket, came back, and went for some F1 event. And then I'm not sure if that was what caused it, but I've been falling sick like crazy. Alrighty, guys. I see no more questions. I'm going to leave it right here. I'll see you guys on Friday for the next stream. Take care and peace out. Bye-bye.